Going back to your performance, which by the way has been amazing, more than 6 years with those returns are not achievable for most of us. I was surprised when I was aware that you mainly trade economic releases news, which most of us normally avoid. What could you tell us about your strategy, about the way you are trading this news release and the way FINBOU is normally trading this kind of stuff?
Yeah, I think the fascinating thing about news is that the news trading in general is not well understood, and I think usually you have to figure out something that others haven't to make money in markets. So in that sense, I think it's there's a lot of superstitions around news trading that uh, obviously once you have traded news enough, you start seeing underlying logic in them, even though initially you might think that why the market is reacting, how it's reacting. But Ivan gave me opportunity to pull a flip chart here,
Yeah, sure.
so I've given lots of presentations in my life, but I think a flip chart is by far the best way of demonstrating how we
Of course,
how
go
we
ahead.
trade. It's way more dynamic.
You can go
So
ahead.
let's do this. So how we trade is basically momentum and mean reversion. It's the same. Yeah, we incorporate lots of technical stuff to our trading in the end as well. We look at the price action a lot. All the trading is based on our awareness of historical price action. So the quintessential situations are sort of the momentum trades. Imagine this is a 5-minute candle or even 1-minute candle. The first minute the market goes up, but then it keeps going up like this. That's a momentum trade, and that's a classic. Everybody knows that. Can you see it well,
Yeah,
by the way?
yeah, I can see it.
Okay, perfect. And then you have the obviously the mean reversion situation where the market might do a move like this. It goes up a little bit, and then it comes down. So these two are the sort of basic situations that we trade, and usually the highest risk moments are always when we can catch a momentum situation like this. That's a situation where the market has not understood the news or has not priced them correctly. It's usually something unexpected has happened. For example, in February this year, by the way, we trade most of our trades, 95% of our trades go to central bank monetary policy announcements. And as most people are aware, there is a lot of focus now on interest rates with higher inflation,
Yeah.
and it's always been kind of like it that FX moves most to central bank announcements and political events. So that's how I figured back in 2014 that there's a lot of money to be made with them if you understand them.
Mm-hmm.
And yeah, so what we do, we generate a plan pre-trade with the scenario analysis, and if an unexpected scenario happens, how I drew here, we usually try to position ourselves after we have interpreted the event. So what's important with the news announcement is how the central bank sees the future of interest rates. It's not actually the interest rate decision usually, although sometimes it is. So it's a bit more complicated than that. But usually it's how they see the future of interest rates. So if they see that they will raise rates much more than is expected by the market, then usually you see a momentum like this. For example, we had the ECB, European Central Bank decision back in February, where you had sort of huge momentum that kept going in 5 minutes because they signaled that they will raise rates most likely in 2022. And obviously the situation has changed a lot, but that was a big signal back in February. I mean, in 4 months, the market is so different now. They are pricing many rate hikes by the ECB, but back then nobody was expecting them to hike in 2022. So that is the typical momentum trade, and then we usually position ourselves in a staggered way. If we think that the move is worth, let's say, 200 pips, and the market only moves 40 to 50 pips initially, and we get caught. We position ourselves initially, let's say with half of the leverage. We know that the market is really mispriced here. Then we might add somewhere here 100 pips, more leverage, let's say 1/4, and so on and so on, because we still think the market is mispriced, but our risk is really tight. We become profitable quite fast. So we usually keep stops around 10 to 20 pips, and we add them in a staggered way. We try to time the entries, by the way, the additions and retraces. We don't usually enter into momentum so long because you could see, even if you are right, you could see sort of momentum, something like this happen. And if you position yourself here, then you are stopped even you are right? Yeah. So that's why, we try to position maybe like here and look for further momentum. When we add into the position, sometimes we don't add into the positions at all, or if we think that the risk reward is not anymore there. So of course everything is based on high risk reward. The best trades we have really huge risk reward, like talking about 1 to 20, 1 to 30. 30 even. The only question is getting enough leverage into the trade then. And for example, that ECP was a really high risk signal. They have been really infrequently that kind of signals. We had a huge positioning on that and high risk. And the way we take risk is based on our past sort of. If we have a high probability of winner, market is mispriced per our scenarios, we take high risk. And if the probability of winning is lower, then we take lower risk. So the second situation is the mean reversion type of trades. So let's say, for example, a great example is the Bank of England decision from 2 weeks ago. So this is a bit more complicated. What the Bank of England did, they raised interest rates by just 25 basis points.
Can you move a little bit?
Okay. My writing is terrible, by the way, but I hope you
it's totally fine.
Yeah, so they raised the rates by 25 basis points, and the market had expected 50 basis points hike by around 50% chance for that. And the most important thing, again, they removed their guidance that they are going to raise rates further in coming months. Remove coming months. So the initial reaction was, the pound was sold obviously because the market interpretation is that they are raising the rates less. So what happened, something like this, this is 1 minute price action. I don't know, is it really visible for you, by the way? Can you really see the
I can totally see it. I have put your screen bigger to allow all the people to watch what you are writing down.
Okay, perfect. That's really great. So what happened is that in first 15 minutes, the market did a move like this, approximately, obviously, and we also read that in the statement they said that they are prepared to act forcefully as well. So we understood that the initial interpretation of the market thought about it was that they won't hike as much. But we understood that actually their guidance had become more hawkish and they are ready to react much more aggressively. So what happened here, I use a different color, we actually entered already here positions because we thought that the market is mispriced already. And we got stopped initially. Stay here. These were big moves. It was like 120 pips, I think. So we got stopped out initially, and we didn't take the full leverage because we weren't sure if the market will immediately get the interpretation right. So the issue here was that we were right about it too fast.
Yeah.
And that's the crux or the difficult thing sometimes in news trading, that you can be right, but the timing can be really difficult and you can get stopped out, right? So the way we positioned, we just took 1/4 of our potential leverage. We got stopped out. Then we did it again here. We got stopped out. at this stage, we knew that this is a high risk trade, right? So we lost approximately 0.6% risk. We had lost this amount of risk, and we had per our risk framework, we had 1.5% risk for this trade. So it was a really high risk trade. Usually our risk on average is 0.3%, 0.3 to 0.5% per trade. So once we started seeing sort of momentum to the upside, the market started going up. We actually took another 1/4 here. Then we added 1/4 here. Now that the price action started going away, and we started to think that okay, the price action is now verifying our thesis, so we do look a lot of especially on mean reversion based trades, you have to look at the price action. So then obviously we didn't even get our full leverage in because then the market started going exponentially up. Pound gained like 300 pips from the bottom. No. So that was really, like, it was intellectually really satisfying trade because initially, I mean, you have your hesitations. We were thinking that can we be that wrong here? I mean, initially during the first 15 minutes, I was talking with Antti, our analyst, that are we actually that wrong? Because usually you do see faster retraces, but I mean, obviously it ended up working really well in the end.
Yeah, I will say when I stream that timing is as important to know the market tendency, because even though you can be right, if you are not in the right market, it's the same that to be wrong. So
exactly.
And that
and
happened.
Sort of hypothesis, the implementation has to match the hypothesis, and I've definitely had in the past problems where we have been stopped out from great trades, and sometimes we still do. We still get stopped out for our risk from great trades that would have worked out. For example, last month, I think this month we got stopped out in the US CPI report by like 2 pips, and we would have probably made 2% on it. So it still happens. You just gotta stay patient with it. You just gotta, obviously you cannot it happens, and you cannot start trading. Okay, I changed my rules here.
Yeah, sure.
Doing per your implementation rules, and we have a vast array sort of implementation rules, but that it would take a long time if
I mean, obviously, losses are our business expenses, so no one is free of having so lose, even though the trade could have been a great one. So that's the law of this business, right? And
absolutely.
do you, apart of the fundamentals, do you also use some kind of indicators, another external help to decide if you want to enter or not in the trade? I mean, are you maybe waiting for some kind of volume to show up, any kind of moving average crosses or something like, or you just know that according to the fundamentals you need to trade, and as long as you have the setup, you just go inside?
No indicators. The only thing that I do is looking at, I think well, based on experience, I think the only important things that we are really looking at, and I'm not pretending that I understand about indicators much. I'm sure that there are many traders that are successful with them. It's just for us, but in terms of technical analysis, we do look a lot at big support and resistance levels. You just have to be aware of those, and price levels. So let's say there's a support in the longer the time frame, the more prominent usually support and resistances are. So let's say there's a euro dollar, for example. Currently there's a huge support at 105. I mean 103 to 105 area, right? So if you look at that level or that sort of zone as an area where the market could potentially turn, or if you see momentum, if it breaks that level, then you will see further momentum. And often these support and resistances have a big impact on our take profits. So if let's say we had a euro dollar short, there was a big fundamental signal, we would look for sort of a break through that area. If we see a break like that, then we we might expect more momentum than usual, because that's huge, like a monthly support with big round numbers, and yeah, but then again, sometimes we would expect a turnaround if there is not a big signal and market is touching that support. We might expect that it might bounce back on it, so we might time our positions on the support levels and so on.
Okay.
So yeah, it has a big impact on our trading. That's the only technical part. Apart from price action, we look at support and resistance. Really simple.
Okay. In talking again about your Darwinia and the capital you are managing right now there, what a person who wants to invest in your Darwinia should have to do in order to invest in you?
I think a prospective investor should get in touch with the DARWINEX or Capriva crew, Ignacio Colon in particular. I think they would treat you really well, and I don't actually, I'm not that aware about the process myself. Obviously, I'm fully invested in the strategy with my savings as well, but yeah, they are the professionals who understand about the onboarding. So
Okay, that answer actually links with the next question, which is about actually investing in something else. I wanted to ask you if do you invest in other sector like real estate, crypto, or something else apart of FINBOU?
at the moment, no. I think as a manager, you have to be sort of, the captain has to be with his ship, right, like all in. I do keep my living expenses for a couple of years forward, so that I don't feel the psychological pressure from making money. So that's the capital I have, but the rest is invested in a strategy fully, and I intend to do it that way in the future. But now that the situation is what it is in terms of high inflation and higher interest rate rises, I think we are definitely going to look into real estate within a couple of years once there is a proper purge in the sector, because naturally house prices go down when interest rates rise, and there's a lot of leverage in the system, and we are expecting to see some steep declines in housing market. So I mean, obviously it's speculation, but it's coming more real and real with the interest rate rises. So we are definitely going to look at real estate. Hopefully we are in a position still in 2 years to invest and especially with debt, because I think you want to get involved in real estate right before sort of interest rates are going to come down, because that's when after that the real estate prices tend to bounce back big time.
It's
But
interesting.
obviously you don't know when it will be now.
Yeah, exactly. But it's interesting this kind of cool mind stuff. Is that some sort of Finnish thing? Because I can relate with Kimi Raikkonen with this cool way of thinking. I don't know if is that you guys some sort of as a society that cool mining? I mean, you stay calm always under pressure. Some kind of Finnish thing that.
I don't really know about that. I think in a certain way there is definitely a stereotype of Finnish people being really calm and level-headed, and yeah, I guess in a certain way I do fit into that stereotype, but in the past I've definitely have had periods when especially when you're starting out trading, you are much more anxious and you do feel the emotions into much bigger degree. But as you sort of mature out and grow, you realize that certain emotions like being anxious and really excited about profits, for example. I mean, you need to be excited to
Yeah.
really like what you are doing, but in the end, when you are trading, you don't focus on that. I mean, you focus on doing the best job you can. So I think it's an ability you work at, and some people are more talented it by nature. For example, obviously Kimi Räikkönen is supernatural with his ability to withstand pressure, and I would never compare ourselves to that. In the end, we sit in the office, but I mean definitely there are parallels in terms of pressure. You still are responsible. It's a big responsibility if you think it that way, that you manage people's money
Yeah,
and you
sure.
are expected to provide a return to them.
I would like to ask you about what do you think is your biggest challenge as a trader?
Well, I do think I think it's the mental side still. I think the mental side, and I mean in general, if you think what's the biggest challenge as a trader, it's definitely the getting the mental side right. And then I know I speak from my experience, what I have seen. I've seen a lot of talented people sort of going into trading and then stopping. Like the issue is often that you haven't figured out something different that others do. Like you have to figure out something different that works in different market regimes, and that's not so easy. That's why the life of an average trader is not that long, and you constantly need to keep improving. But I do think persistence is more important trait than than anything in trading. That you just need to keep going and keep going through those drawdowns, because obviously drawdowns are going to be painful for everyone, and you just need to stay motivated and have faith in your edge and keep doing what you are doing to get out of the drawdowns, because they happen. In the past, for example, in 2015 to 2017, we didn't have serious drawdowns. We bounced back really fast. So I did a sort of a rookie mistake, thinking that our strategy would be working like that in every market regime. So of course the drawdowns were much more painful back then when they happened, because now I've come to expect the drawdowns to a certain degree, and I do a much better job in expectations management with investors, in the sense that when somebody asks what are you going to return, I say that it's 15% annual for 6% VAR. It might be much more, it might be much less, and I think that an investor needs to stay in the long term to really benefit from the strategy.
Is there any trade in particular you are most proud about? I mean, do you recall any trade which was really successful? We don't need to talk about money, but any trade do you really are feeling proud about?
Well, I like that Bank of England example.
One.
Actually, it was. I mean, it's a fresh trade. There's so many trades past years that that definitely. But I mean, I think that demonstrates it quite well where we have an edge. Like we had researched that kind of situations in the past. We had implemented trades. So, for example, even though we were wrong initially because the price action, we were aware that could happen. So in that trade, the implementation, the execution, and the analysis all went right. I really liked it. It was a quite complicated trade as well.
And is your
But I mean, yeah,
go ahead,
please
sorry.
go ahead. Did you ask about bad trades?
Well, no, but I mean, you can also tell me about the worst trade of your career, the one that almost made you give up, but obviously you didn't. Is there any trade in particular that hurts you hard?
Well, there has been quite a few such trades that have been really painful, and I've taken lessons from those trades. I think back into 2021 at the start of the year, we had a big drawdown, and I did lots of mistakes. We've worked on those and similar situations. What I really like how we trade now, similar situations, similar trades are actually becoming profitable that we were negative back in 2021. So it's a huge improvement. But back then there was one really painful trade with Reserve Bank of New Zealand, where they sort of signaled. The price action was like this. This is 1 minute chart. And it's typical mean reversion, but I thought it would be momentum because they signaled they kind of signaled that they don't see that they can cut interest rates still. And now the mistake that I did on that trade was, I mean, market wasn't expecting that they signaled that they will cut. So this is Feb 21 RBNC. In case somebody, Reserve Bank of New Zealand, in case somebody wants to review what they actually said. And they signaled that they still see they potentially that they could cut interest rates, and we went short here on New Zealand dollar because that was unexpected, expecting momentum. Now the big mistake in this case was that the market didn't think the guidance is credible because obviously the markets were booming, and I was trading the fundamental signal on face value, and I kind of ignored the importance of price action. So once this move started, obviously we got stopped out, but I had assigned huge risk for this trade. So I kept shorting even though the market, I went short again, then I get stopped here, and so on. And we lost quite a lot on that trade, and definitely nowadays we are super aware of this situation. If we get stopped out like this, we either stop or we deleverage completely and we look for more favorable entries. We would never fade momentum trades like this in a similar way. Like, for example, there was a similar trade with Norses Bank last week where there was exactly similar decision. They were really actually, well, in a way they were more hawkish. This was a dovish decision, but they were hawkish, and the market really didn't respond to the Norses Bank. And we were aware that market, because of the trend and many things, that's what's going on with Norway, the market would not be responsive to the interest rate decision. So we took really little leverage. I think we ended up losing 0.2%, but that would have been a high risk trade in the past, but now we just lost 0.2%. And actually, if we weren't stopped, we probably would stopped by a few pips, we would have made a lot of money because the Norwegian krona gained the next day. So, so it was a bit unlucky in that regard as well. We had two quite unlucky trades.
We also say sometimes you win, sometimes you learn. So
yeah, absolutely, and I think it's imperative that you take these lessons. And what's the most important thing is that you see progress in similar situations, that you don't repeat the mistakes to similar degree that you did in the past.
Totally agree. Could you please tell us, normally, what kind of chart do you use? Are these hourly, candles, daily? Is it daily chart, or what kind of chart do you see normally when you are trading?
Well, when I'm trading, it's typically for the first reaction. It's because the initial reaction, it's usually 1 to 5 minutes for, let's say, first 30 minutes. And we look 5 minutes chart, probably most of the time 5 minute chart. And most of our entries are timed based on 5 minute chart. So if it's a momentum based trade, we often do trade 1 minute chart. But on mean reversion, because we want to get in fast, so 1 minute chart is usually best. And if the signal is really simple, we can, and we see that there's liquidity in the markets, we can leverage already here, right? But I mean, if it's a mean reversion trade and we are not sure when the market, turns, we definitely change the 5 minute chart and we look for catalyst sort of a move, where it would be, where it would be turning, and then we sort of add the positions on retrades.
Okay. Do you have any average trades per month? I mean, normally you do like 4 or 5 trades per week, per month. Do you have any average?
I don't know the way we position. I think this is really confusing to many people. Is that you see a lot of trades because we fragmentate the positions to get at the best levels and to get at the right risk and so on. So in a given event, we might have a lot of trades. So for example, with the Bank of England, we had maybe 20-30 trades in the end. 20 to 30 trades. And that's a lot. That's like an outlier example. But in certain instances, when there's a big press conference, there might be news. For example, the last ECB, there was a market reaction like this, the Euro first weekend. This is the start level, it's first weekends. And then it started gaining. This is 5 minute chart. Then it started gaining, and then it started coming down again. So you have much more trades in situations like this because the information actually changed here. We were first aggressively long here in 5 minutes, and then we switched to short here because the ECB provided a mixed signal on fragmentation that it didn't. the initial signal was hawkish for interest rates, but then during press conference, Madame Lagarde wasn't convincing about how the ECB will tackle rising spreads in Italy and so on. So we shifted to short there,
Okay, I see.
and we exited all the positions
Okay.
on the long term.
Talking a little bit more about miscellaneous, I would like to ask you, because that's some questions that always we ask our guests to know their opinion and their point of view. And I would like to know, what book do you think is mandatory for those that want to thrive in this business? For to learn trading or fundamentals, whatever book do you think it's mandatory to read?
Well, it's since I'm a father of a 7-month old, I don't really remember the books that well that I read. I used to be a voracious reader, but past 2 years I haven't read that much. But back in the when I started out and with the preceding 5 to 6 years, I probably read like over 100 trading books. Most of them not that useful, but definitely
Yeah.
really useful ones there. I think. Well, there's plenty, though, I would recommend. I mean, I think the market research books are absolutely mandatory. Those influenced me the most. I figured out that, the reactions to news can be counterintuitive based on them. For example, during Brexit, there was this huge sell-off in the UK stock markets, and then you have huge bounce back. So what the stock market did is like a move like this in hourly candles to Brexit, because the pound was devalued, right? So if you knew that, you would have made a lot of money with that. And I actually traded it with small size and did make a little bit with the Brexit part. But I mean, that's market research definitely influenced that kind of. I started, getting a lot of ideas from the books. But yeah, there's plenty. I mean, Kahneman's Thinking Fast and Slow is a big one on psychological biases. Ray Dalio's. I think the principles one is not for everyone, but principles for navigating debt crisis is something you really want to read as a sort of macro trader who is investing in the long term, so you understand history. Then there's More Money Than God, which has a terrible name, but it's a really, really good book on hedge fund history.
Okay.
Really well written, and yeah, I think that's probably it. We're quickly thinking. Well, there's Steve Drobny's Inside House of Money and Invisible Hands. Those are excellent books. I think they are like a more mature version of market research in a way. And I think if I had to say what kind of interview-based books I would like most now, it's those two.
Okay. I mean, I need to say, you have been the first one that has been talking about those books, it's a different answer, because normally always people repeat kind of the same kind of books or the same titles, but you have been a different one, so I like that. Also, another not important question that most people like to also learn about is, what kind of movie about trading, business, or finance do you like the most, or which movie has motivated you the most?
Well, in terms of the movies, I think most movies I like. I do like
It could be a series.
like movies like Wall Street and Wall Street. They definitely haven't been a source of motivation. They are like, I think it's really hard to make a movie about trading for general public. I think those movies are just sensational with sort of charismatic main roles with like the iconic Gordon Gekko and less iconic Jordan Belfort. But I don't think I have had any movies that really influenced much. I think it would be like if you made a movie about George Soros or Jim Simmons, I don't think it would be too interesting to general public.
Yeah, that makes sense. Yeah, you're right in that question. But needless to say, none is also valid answer for that question, so it's totally fine.
Yeah,
it's not the first one that's saying actually none, so it's totally fine. Where do you see yourself or FINBOU in 5 years' time?
Well, I'm definitely hoping we can make a living out of trading for us and keep doing what we are and keep improving. I mean, there's a lot of I like to think in terms of scenarios, like I think in our trading. I think there are scenarios where we can sort of if we grow enough, these sort of rules how we trade events can be transitioned into algorithmic trading. It just costs a lot to hire the appropriate stuff. So I'm hoping that sort of long-term vision comes to life, hopefully within 5 years. Now the market condition is really favorable for us with lots of focus on interest rates. So I'm hoping that in a certain way this persists. But this is kind of the normal that has been, well, not to this extent, but you had the corona environment when the market didn't care about interest rates at all, but now and that was highly unusual, and so we are closer to normal now. So I'm hoping we get there. I'm hoping we in 5 years we are transitioning the trading to algorithms, and yeah, I do think that algos would trade much better than I would in the end. But yeah, it just costs a lot. We need to grow in terms of assets to actually afford that.
Okay, and that's I think that's the for me the most important question of all of them, because well, I'll explain you why. If you could, what message would you like to send to you in 5 years' time? Not that I will automatically send you that answer to you in 5 years, so you will receive your own message for yourself. So, what's the message you would like to tell you in 5 years' time?
Yeah, that's a tough one.
It is. It is indeed.
Well, there is good quote from this tennis player, this Billie Jean. I don't actually watch tennis, but I love the quote. I think it's captures something in professional sports and in training really well. It says that champions keep playing until they get it right. So you can remind me on that within 5 years.
Okay, then you receive your own message by email in 5 years. Hopefully, you have the same email address. Other than that, we have finished with the questions. Is there anything else you'd like to comment before we finish?
No, not really. This is first time I've ever done a podcast, and I'm been really nice to do one. And thanks so much, Ivan, for having me.
Okay, I hope you were comfortable. I really enjoyed this interview. I think it has been a very interesting interview. Most of also obviously because it's from one of the most successful forex traders nowadays, which I'm so excited about. I just want to say thank you, Aatu, for your time. Thank you for allow us to make this podcast with you today. I hope all our audience will enjoy and will value all your tips, all your knowledge, and all the stuff you have been talking us about. And well, that's it. Thank you so much for your time, and I hope to see you again in the future.
Yeah, thank you so much, Ivan. It's been a pleasure. Has been on my side.
Okay.
Definitely.
And well, thank you so much for everyone for watching this podcast. I will see you in the next chapter with the next guest, and I hope you enjoyed this episode, and see you next one. Have a good day. Bye bye.
Bye.